Hi, it's Mel and Charlie with Florensics, and today we're going to dive into options writing. Most of you guys are very familiar and probably trade directionally, calls and puts, but there's this whole other side of the options market where you can actually write contracts. So we want to be able to talk a little bit more about that to make sure you actually understand what you're looking at, what to look for, and the purpose of writing. So, what is options writing? Writing is either referred to as options writing or a sold to open, and that can be a put or a call. But ultimately, somebody's writing that contract and actually collecting that premium opposed to buying that contract where they would be putting up that money. So it's another way to be able to collect some premium and another way to be able to profit in the options market. Some advantages of writing options is that you get to generate that income by collecting premium. And let's face it, most options will expire worthless. So those that are option writers are still able to profit off of that decay that options naturally have by writing contracts. It will also help to reduce the cost of actually purchasing shares. If you write a contract and you actually want to be assigned, you're actually able to take in some premium and offset that cost basis by writing. But of course, there's always going to be some risks. Charlie, what are some of those risks to writing options? I know you write a lot of options.
So I do. I write a lot of options, and when we write or when we buy directionally and an option costs us say $100, call on Microsoft, we know we can lose $100. When we write that call, we can technically lose infinity. And on the next page, we'll get into a little bit of that.
But let's first kind of talk about how to even determine what is options writing, whether you're using BlackBox or another flow service. You need to know what that looks like as that's coming in the feed to make sure that you are actually staying on the right side of the trade. So before we go down into a few options, let's talk about what we're actually looking for. So these contracts are sold to open, and they're going to be coming in on the bid. While you can see writing and writing still exists, what we are specifically looking for to know that it is actually writing is contracts that actually exceed the current open interest. Because remember, you can't close something that's not there. So, BBS members, you're familiar with the color coding of the system, and yellow on our system indicates that OI has been exceeded in that transaction. So we're looking for yellow, and if it comes in on the bid, whether that be a call or a put, that's letting us know that's writing. Of course, that's with one line of flow. We'll talk about analyzing the flow and what we're specifically looking for when we have more than one item. We're not looking for that contract price to increase because remember they're writing these, they're sold to open. So we're going to be looking for that contract price to be going down, decreasing, same strike, same expiration, contract price decreasing. Another check, you could also look at implied volatility because there's not an interest for that to gain because it should be decreasing. They're sold to open contracts. And we had a really good example. This Rivian has been on a run. Now, this came in, I believe, last week or a week and a half ago, but Charlie, walk us through what we've got here as far as what we're looking for.
This is perfect put writing. And what we mean by that, again, is this is coming in bid side. We know it was opening. Now, the spot price here on all six lines of Rivian was 15.95 or 15.93 within range. And what we noticed, though, every time it got less. The bottom, it started off at 97 cents for 168,000. Then it goes to 96, 96, 94, 94, 94. Look at this IV over here. Started off at 89, cooled off to 88, cooled off again to 87. That tells us it's riding. With the spot price staying where it was, if they were actually buying these puts, that would have increased. It would have all done the exact opposite of what we have right here. So again, bid side opening, IV decreasing, details decreasing, perfect put flow. And we can see where Rivian is now. I think we've hit what, 25, 26 since then.
Great insight before that move. Sometimes that's often what you'll see is put writing before they start to get aggressively long with calls. Something to really be mindful of, to be on the lookout for, because it's one of Charlie's and my favorite. But of course, put writing is going to be bullish put activity. But of course, we can see that on the call side with bearish call activity.
Yep. So in calls, it's the exact opposite of puts, where if I'm writing a call, I am actually bearish. And we talked a minute ago about losing and the risks in options writing. Snap's a good example. Right here, again, though, perfect textbook execution. You can see it was 71 cents, dropped to 70, dropped to 66. The IV side started at 65, dropped to 64, dropped to 61, while the spot price was the same. So again, very clean writing. Now, these contracts here are up to $1.40. So they're already down 100% on this trade. If they're still in, they're down 100%. And if Snap keeps going, let's say it's at 12.50, they would be down 230 or 40%. So that's when we talk about unlimited. If I'm buying directionally, I can only lose what I put in. I can only lose 100% of that trade. Writing, you can lose basically infinity. Now, I don't see that happening with Snap or anything, but I'm just saying you can lose. But this is textbook bearish call writing. A lot of people do this, and I'm more of a put writer than I am a call seller. Very rare do I write calls, but I am more of a put seller, which would put me in that top line of Rivian up there. But it is something we use a lot. And also, Mel, this is part one of a multi-part series going over a lot of strategies. We've got risk reversals, bullish and bearish risk reversals, and some other things coming up. So this is just video one.
Absolutely. Options flow can be extremely complex. And again, most of us are used to looking for just directional trades. There's a lot of insight you can get once you actually understand the whole other side of the market, which is some of your advanced strategies and, of course, options writing. Thank you guys so much for your time and look forward to putting out more of these so that you guys can make sure you're on the right side of the trade.
Thank you.
Nailed it.